Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, June 18th. A quick announcement before we get started. Early access tickets for the Information's WTF Summit are now on sale. This is one of the Information's most exciting events of the year. Past speakers have included Katy Perry, Paris Hilton, and Chelsea Clinton. You can scan the QR code on the screen or go to our events page at theinformation.com/events for more details. Prices are only going to get more expensive, so if you want to lock in the lowest price, now is the time to do it. First up on the show today, star Google AI researcher Noam Shazeer is joining OpenAI. My colleague Erin Wu will join the show shortly to share with us what she knows about the staffing shakeup. The Information's Asia Bureau also published exclusive reporting that the early backers of Manus are planning to buy back the company from Meta. Our Asia Bureau chief will join us to share with us what she knows about that. We'll also dig into the growing competition facing OpenClaw and the race to deliver lower-cost alternatives to Nvidia chips. And we're going to close out the show with Kindred Ventures. We're bringing on Steve Jang. They just raised a bunch of new funds. It's going to be a great show, so let's get right on into it. Noam Shazeer is joining OpenAI. Shazeer is a big name in AI research. He is the founder of Character AI, which Google essentially gobbled up through a creative acqui-hire licensing deal for $2.7 billion. I want to bring on our OpenAI and Google reporter Erin Wu to help us break down the significance of this move. Erin, welcome back to the show. It's great to have you here. This is kind of an exciting story, mostly for you because you cover both OpenAI and Google, and I imagine you were very much well positioned to cover it. Why do we? What do we know about why Noam Shazeer left for OpenAI?
Right. So there are a lot of, first of all, there are a lot of unanswered questions. But just to get into who Noam Shazeer is, Noam Shazeer is a really big deal. This is someone who spent 2 decades at Google, left to co-found Character AI, came back to Google in 2024, and this massive $2.7 billion deal to hire Noam, his co-founders, some employees, and to license the technology. And so he's a really big deal. He's someone that Google paid a ton of money to get back, but he's also really important because he co-authored the paper that's essentially the foundation for the entire generative AI boom that's happening right now, known as the Transformer paper. And so there's a lot of questions about why he left. Questions about was he losing scope? Was he losing compute? Was there some kind of dispute with Google? Essentially, we've been covering the AI talent wars for the past couple years, especially since last year. And my understanding is that Noam Shazeer is someone who kind of could have walked into any job that he wanted at any lab at kind of any price. And Google is, you would have imagined, would have done quite a lot to keep him. And so I think there's still a lot of questions about what happened and obviously how much money is OpenAI ultimately paying him.
I know. Well, that's the big question. This is, I mean, it's kind of interesting here because, look, the $2.7 billion acqui-hire licensing deal that Google made for Character AI. I mean, I don't know how much of that he actually ended up receiving. He's not hurting for money, is the point.
Sure.
Okay, and so I almost wonder if this is sort of an alignment transition, or that compute, as you said. Although Google, it's not like they don't have access to compute, and so maybe the vision was more exciting in OpenAI. There's a lot of speculation there. What I want to focus on, though, is where do you think OpenAI could use
Yeah.
Gnome's help in this moment?
Right. So this is really interesting because Noam was working on pre-training at Gemini or at Google, and that's the first stage of training a model. And pre-training is something that Google is viewed to be really strong at, and OpenAI is viewed to have been kind of weaker at. And so this is something that could be really good for OpenAI because here's the star researcher coming in who's really specialized in the thing that they've been kind of weaker at. As the competition increases with Anthropic as OpenAI tries to catch up to Anthropic's most advanced models.
Okay. Now, is this still a game where a single researcher can really move the needle? I mean, my impression was even while these model rivalries are shaking out, I thought we were in the application phase where We had to develop applications that are actually compelling and that we can
Yeah.
operate profitably. I mean, researchers are still like the ones to pay for.
Look, I think, like, if there was going to be a researcher who would be the one to pay for it, like, it's Noam. Like, Noam is that researcher. He made researchers that I was talking to at Google DeepMind were telling me, like, he was making, like, really important improvements to Gemini's pre-training architecture. And so, like, I do think that the model still matters. You see Anthropic, like, leapfrogging everyone else in code and what that's done to its kind of reputation and its revenue and, like, its standing with enterprises. And so that is also important. And I think you also have to remember that, I mean, for a lot of these researchers, this is in many ways kind of like a quasi religious enterprise. Like they're trying to build AGI, like they really care about this. Like I was told at one point, like even at Character, like no one wanted to build AGI, like Character, this like much smaller, like much less well funded startup. And so for researchers, I mean, like, even if it's like, oh, like what really matters now is enterprise adoption and like building the harnesses, like they also still want to build AGI. And like maybe there's something about OpenAI that made Noam feel like, oh, like he would have a better shot at it there.
Right. Well, Aaron, it certainly is a big move. I want to thank you for coming on and helping us to make sense of it. That is
Yeah.
Aaron Wu, our OpenAI and Google reporter here at The Information. As Meta unwinds its acquisition of Manus, the Information's Asia Bureau has exclusive reporting on the current state of Manus's financials and who plans to buy back into the company. I want to bring on our Asia Bureau Chief Yang to walk us through what we know. Jing, welcome back to the show. It's great to have you here.
Always glad to be back. Hi, Akash.
What did you find out about Manus's financials, Jing?
So Manus, according to our reporting, as of recent weeks, their annualized revenue run rate or ARR actually has achieved in somewhere between $400 million to $500 million. That is compared to $100 million in December, right around the time when Meta bought Manus.
Wow, that's like a what? That's a 400%
Yeah,
increase.
4 to 5 times increase. Yeah, it's quite something.
Yeah, okay. And remind us, what is the current state of Manus's product? What are people using the agent for?
So Manus sort of came out of nowhere, just suddenly went viral on social media among tech-savvy users in March last year with their agentic tools. Bear in mind, this was at a time when AI agent was not the most popular thing that people when people talk about AI applications, and then they were sort of among the first to release a sort of general purpose agentic AI tool targeted at consumers, not enterprise. And at that time, what their tools can do is basically they can browse a lot of the websites and it just complete a lot of tasks such as booking your travels or analyze your stock portfolio without much supervision. And the product has continued to evolve, and they have shipped a lot more features since then. And then they mostly make money from charging subscriptions ranging from $20 to $200 a month.
And I should say that, look, Manus's traction is quite impressive, especially given since the Manus mania, the OpenClaw mania has very much been front and center. People are making their own agents. And now we're in the era, we're going to talk to Stephanie Palazzolo shortly about startups that are challenging even OpenClaw with similar sorts of technology. And so it actually is quite impressive that Manus has been able to keep growing its revenue profile. Um, if we go back to this Meta Manus deal, so now we know that the government of China has ordered the reversal of this deal, and so how does Meta tactically unwind Manus? Does it have to sell it back? Like, how's this going to work?
Yeah, so based on the Chinese government's order, essentially they said that you must revoke this transaction. That's the exact wording coming out of that directive. And so essentially what this means is that the situation surrounding Manus must be reversed to before Meta bought it. So then by the same token, this means that Meta has to give up its control and all of its ownership in Manus. And so, in order to achieve that, we reported that some of the investors that invested in Manus prior to the Meta acquisition are now planning to buy back Manus's shares from Meta. However, the catch here is that they are planning or hoping to buy back Manus at the original price that Meta paid for, which is around $2 billion. But then again, remember when Meta bought Manus in December, Manus's revenue was ARR was 100 a million, and now
Right.
it's much times higher. So then the simple math would suggest that if everything goes as planned, these investors would be getting back a company at a discounted valuation.
Now, you said original investors. Remind us of who has agreed to buy back into the company, who has opted to sit out, and then very quickly, what is the plan for Manus as an independent company? Then is it going to stay independent?
Yeah, so Manus has two groups of investors, Chinese and American. So the Chinese investors, namely Zhen Fund, a top Chinese VC firm specializing in early stage startup investments, and HSG, formerly known as Sequoia Capital China, as well as Tencent, are the ones contemplating this transaction. And a benchmark, which led a round of investment in Manus in March last year, shortly after the startup went viral, will not be participating in the round. And in terms of Manus's future, it's too soon to tell, too early, but there is a possibility that the company may be eyeing for a Hong Kong IPO in the future at some point. We reported that they're already laying the groundwork for that.
Great. Well, Jing, I want to thank you for coming on. That is Jing Yang, our Asia Bureau Chief here at The Information. OpenClaw has a new competitor. Many companies have launched copycats, but one new startup in particular is picking up some traction. I want to bring on Stephanie Palazzolo, author of AI Agenda, to share with us what she found. Stephanie, welcome back to the show. The company you wrote about is called Hermes. Am I pronouncing that right?
Close. So not the luxury fashion brand. It's pronounced Hermes.
Okay, well, forgive me. I mean,
No, I,
come
I
on.
made I made the exact same mistake too.
I don't know. Why wouldn't you just call it Hermes? I mean, I get it, but okay. So Hermes, it's way less cool. I'm sorry. But Hermes, what do they do?
Yeah, so Hermes is a OpenClaw competitor, which basically what that means is it's this kind of open source software that helps people run AI agents on their devices. So you can basically, tell Hermes to do tasks like sending emails or, coding on your computer, even things like maybe you want it to check in once a day on like a vintage item that you really want to buy or to respond to, WhatsApp messages from your friends.
Okay, and this tool is getting a lot of traction. Do we have any data? What are you seeing?
It is. So, unlike OpenClaw, which was released, earlier this year, Hermes is a newer entrant to this market, but it's definitely catching on fast with developers. Just in the last month alone, it has surpassed OpenClaw when it comes to the number of GitHub contributions, which is kind of a measure of like how engaged developers are with a certain tool, how many changes to the code behind the tool that they're making. So it's definitely catching on a lot both by looking at the data, but also just anecdotally talking to developers and founders. It's definitely coming up a lot more in conversations.
What do developers like so much about it?
I think what a lot of developers have been telling me is they really like its ability to write skills. So, kind of breaking that down a little bit, skills is basically that's referring to this kind of manual or like set of instructions that tell an AI agent how to do a certain task. So, you might write a skill for, you know, um, the certain way that you want it to write code or certain like sites you wanted to check whenever you're asking it to do research. And so normally with other AI agents the user has to write those skills themselves or sometimes you can download these skills from the internet. But the interesting characteristic here is that with Hermes, the agent actually writes the skills itself. So, when the agent does a new sort of task that it hasn't done before, that it thinks like, oh, hey, this is like a pretty complicated task. Maybe it's good for me to take some notes on how to do this task in the future. And so that way it takes a lot of the onus off of the user to have to, manually write out instructions for everything that the agent has to do. Another interesting thing too that I learned from talking to the co-founders of that, the co-founders of the company behind Hermes is that, when you're not using the agent actually kind of like reflects on its skills. So it kind of like reads through its skills. Sometimes it might see like, hey, these two skills are pretty similar. Could I actually simplify by just combining into one skill? And this process of reflection, they said, is almost similar to the process of like sleeping in humans. So, when you sleep, you think about what you learned during the day. It helps to better commit it to your memory. So you can kind of think of this as like sleeping, but for agents to help them better remember the skills that it learned during the day.
Now, I might be totally off base here. We had Rocket on the show a couple weeks ago talking about recursive self improvement. These are not at all related. Are they? This idea that the agent can keep working in the background, these are still two separate concepts?
So I would say they are related, but not exactly quite the same. I think like the idea behind recursive self-improvement is, AI models that can train better versions of themselves. And so I would say that this example that we're talking about doesn't quite reach that bar, but it is like along those lines, right? It's this idea of AI being able to improve itself without needing a lot of, manual instructions or prodding from humans. So even though it's not really recursive self-improvement and the fact that it's like it's not changing the underlying AI model, it is a way for the for this AI agent to improve itself again without.
Right. It's like recursive self improvement of the agent,
Yeah,
but not of the
yeah.
model itself.
I would say that's fair.
Okay. Tell me, what's the current status of OpenClaw? Are people still as excited about it? Has demand for OpenClaw or usage of OpenClaw, has that waned at all recently, or is it still pretty popular?
Yeah, so this is a topic that my colleague Rocket has really done a great job of covering. He's written a couple stories on this, but essentially the issue that OpenClaw is running into now is obviously it had this huge viral moment earlier this year, but kind of as time has passed, we've seen more developers complain about OpenClaw, saying that there are bugs or the software isn't being maintained very well. Just kind of saying that yes, like this was a really cool kind of viral product, but there are lots of questions around whether it is going to be like reliable and it's going to be able to be used in like big businesses, for instance, for like their most important task that they want to do. Like, is this something that you can really rely on in those cases? So, I would say that maybe excitement is waning a bit, but it has yet to be seen, if OpenClaw and its creators can kind of turn things around and
And
kind of.
what about at the bigger tech companies? We've covered some of these copycat-like products that bigger tech companies have tried to emulate OpenClaw with. Have you heard of any excitement around those? And I'm asking because a lot of the bugs, for example, that OpenClaw may have had, or the lack of development. I mean, I wonder if a bigger tech company could afford to maybe make it a more polished experience. Have you heard of any traction in that arena?
Yeah, so there are definitely a couple kind of bigger tech uh, versions of OpenClaw that have popped up. Like Nvidia has NemoClaw, for instance. There are also other versions that are offered by smaller startups that are trying to serve large businesses like GenSpark. So I definitely have heard those come up a bit in conversation, but I feel like they still have yet to reach kind of wide adoption. I think part of this is like the people that are trying out these AI agents, like you really need to trust the AI a lot because it's, taking actions for you on your computer. Sometimes it's messaging people in Slack or, sending emails on your behalf. And so I think the people that are willing to give that sort of trust to AI agents are usually kind of like individual developers that are testing out all these like fun kind of open source products or maybe like products from really small startups. I would say that like, over time, we're seeing products from OpenAI and Anthropic, like Codex, for instance, kind of become more of this like AI agent product and try to become more of a general product versus a coding specific one. So in those cases with like Codex and Claude Code, as those become more like general agents, I mean, I think we're definitely going to see a lot of people use those just because, they might trust a company like OpenAI or Anthropic more than smaller startups.
Right. In other words, OpenClaw which was originally rooted in Anthropic's Claude bot and Claude models. Anthropic may actually just come full circle and encroach on that territory. Stephanie, it's a great story. I want to thank you for coming on. That is Stephanie Palazzolo, our AI reporter and author of AI Agenda here at The Information. Amazon's AI chips are making headway with businesses, signaling that companies might be looking for alternatives to Nvidia. But Amazon's chips do have some clear advantages. My colleague Catherine Perloff covered that story in our AI Agenda newsletter this week. I want to bring her on to walk us through her reporting. Catherine, welcome back to the show. It's great to have you here. Why are Amazon's AI chips getting traction?
That I think there's a lot of reasons. First is price. Nvidia chips are expensive. I talked to someone who is a kind of cloud consultant. His client found that using a combination of Amazon chips was 80% cheaper than Nvidia chips. Another reason is these compute shortages that we've reported on. It is hard to access Nvidia chips. It's hard to access Nvidia chips through cloud providers. And so more companies are interested in buying their own hardware, and looking for alternatives besides Nvidia when they're looking for that hardware. And Amazon's sort of trying to fill some of those gaps.
And this is demand for two types of chips in particular. You mentioned Trainium and Inferentia 2. So both of these chips are getting popular. What's the difference between these two chips?
Trainium was designed for training, so training AI models, and in practice, like if you're a company that isn't OpenAI or Anthropic, often you're using those. When we talk about training, it's to like fine tune an open source model for your particular business needs. And Inferentia was designed for inference. Now, today, both are used for inference, and you can use Trainium for inference, but that's sort of the technical difference. But in practice, you can kind of use them for both cases, training and inference. Or well, you can use both for inference at least, yeah.
And tell me, just going back to the price piece, because price is such an important factor here. Did you get an understanding of if price is better because of the fact that they are charging that it costs less per token, or that it can consume less tokens, that it's more efficient with token use? Did we break that down at all?
I think that is something that is like sort of there's maybe some debate about that. So one of the people I talked to did say that like they found that the training with the Amazon chips was actually like 1 hour faster. Um but you know if you there's a lot of research from Nvidia that shows their chips are actually more efficient. So even if their chips cost more, you know, over the long run, maybe they would, because each NVIDIA chip is more efficient and does more work,
Yeah.
the total
And
price.
I might be actually conflating the model efficiency here with the chip efficiency, because I think the chip efficiency ultimately comes down to how much power they consume as well. So I might be conflating two separate things there. But one of the interesting points in your story is that you talked about the prospect of customers, enterprises wanting to build their own data centers potentially with these chips. What do we know about that?
So yeah, I mean that's something that's really interesting. So first of all, Andy Jassy in his shareholder letter in April talked about, we might start selling these our chips outside of, AWS, which is a big deal because, like AWS like basically invented the public cloud. They got all these people to move off of their own data centers. And now they're seeing an opportunity to sort of work with customers' data centers, especially in um regulated industries where they can't do all their work on the cloud. And so and then because of the problems with, accessing and paying for NVIDIA chips, so I talked to some customers that, are interested in opportunities to use Amazon's chips in their own data centers, either through sort of hybrid cloud environments where Amazon does some of the equipment and some of the management for the data center, but the company does own some of the footprint, or totally just buying the hardware themselves. I think there's sort of interest and then exploratory conversations happening on both fronts between Amazon and enterprises. Though starting certainly with hybrid cloud environments like AWS Outpost, which is kind of a system where AWS provides you with some equipment, but the company owns the data center.
How big is the chip business for Amazon now?
They say it is a $20 billion run rate. And to be fair, we've been talking right now about AI chips, Trainium and Inferentia. Amazon also has a CPU, so that's like your kind of traditional chip, and that's called Graviton. So the $20 billion run rate includes Graviton, but it notably, it's just sort of, I think that we break this down in other stories I've written, but that $20 billion run rate is sort of just for companies renting the chips versus like Amazon using the chips in like other kind of services or capacities. Um, Now, what's interesting is Jassy has said that the business would be a $50 billion run rate business if they started selling chips outside of their data centers in the way that Nvidia does. I mean, that's what he says. I don't know if we can fully take his word for it. Like, how did they get that number? It sounds good. But right now, yeah, $20 billion business, including Trainium, including Graviton. And, we'll kind of have, and so that's why they kind of see an opportunity of like, how can we grow this outside of, just the traditional way people have been renting Amazon's AI chips, which is including in like, Amazon's AWS's servers.
So what's interesting here is, I mean, Amazon and Google are very much developing these chip franchises pretty quickly. I'd say Google, of course, had that deal with Blackstone. They established this joint venture where they're going to create a lot of compute capacity to rent out with the TPUs. Could you see Amazon pursuing maybe a similar kind of joint venture with a financial institution like that?
Yeah, I think it's definitely, like, something that could be on the table. It seems like they are, really seeing their chips as sort of a standalone business for them and not just sort of like a means to an end for AWS. I think actually speaking to that strategy, at the end of last year, they took the chip business, and reorganized it outside of AWS into a separate unit of Amazon, which also includes the development of their own AI models and also quantum computing. So they kind of made a whole new organization separate from AWS. So I think, they want to sort of be leaders in chips. And I could totally see them trying to get a partner to help, bolster that business, especially when a lot of the neo clouds where a lot of this sort of chip activity is coming from are supported by Nvidia. And it's, you're trying to figure out ways to get in and support sort of new entrants to the market that might want to use Amazon's chips. I mean, though, having said that, it is a good sign that I've talked to some companies that seem interested in, using the chips and they're kind of getting traction. So I think that kind of would give support to outside investment. I think before the Blackstone deal, we reported that like, Google was talking to Meta about using their TPUs. So once you have customer interest, I think that can get financial institutions interested in sort of making a bigger bet.
Great. Well, Catherine, I want to thank you for coming on. That is Catherine Perloff, our Amazon reporter here at The Information. Kindred Ventures recently raised $355 million in new funds. The company has invested in Coinbase, Perplexity, a whole host of other companies. My favorite, Blue Bottle Coffee. Joining me now to discuss the new fund and some of what is on his radar is Steve Jang, founder and managing partner at Kindred Ventures. Steve, welcome back to the show. It's great to have you here.
Thanks for having me.
Do you have a favorite Blue Bottle order?
Black pour over. That's it.
Black pour over. Okay. I'm an iced Nola guy myself with a little bit of oat milk.
The sugar, right? Right.
Okay. So you got a new fund. What do you want to invest in with the new money?
Yeah, I think there's a few themes that are happening right now. One, we're a focused AI and deep tech investor, and we have been for the last couple of funds. We made that pivot back in 2022, 2023. That's played out well for our founders and for our LPs. And what that means is that we've been focused in a few areas. One is frontier labs. We continue to believe that domain-specific frontier labs, research labs, have an opportunity to create real progress where large, dense foundational language models are not making the progress in deterministic outputs that a lot of different industries and specific use cases need. The second area is AI infrastructure, which continues to be a huge opportunity and a pain point for the overall AI industry. And the reason why that is that the widening gap between demand and supply is ever widening. We have right now 20 gigs, essentially gigawatts of compute power on AI data centers today.
Right.
We will probably get to, if we're lucky, we'll get to 40 gigawatts within 3 years. But by our estimates, we see the demand for AI compute, to actually reach 80 to 100 gigawatts by 2030. And so we have a potential gap of 60 gigawatts of compute that we need to race to build in various different oblique ways to shore that gap. And so AI infrastructure continues to not only be an area for early stage investment for us, but also ever widening and ever growing opportunity. And the third area would be physical AI, which includes autonomy, self-driving vehicles, all the way to humanoid robotics and specialized robotics.
Your old stomping ground, Uber. It's the Uber flavor of investment.
So those are the three areas that we really
And you announced a deal today. Architect Labs is probably in that second bucket, AI infrastructure. They are a custom AI chip lab. Is that the idea?
Correct. So it was interesting to listen to your last discussion with one of your reporters, in that I think what people are realizing is that controlling their own stack, all the way not only from applications down into models, right? Fine tuning open source models for lower token costs across their operation and product, but also going down into chips, right? And to be able to have different types of custom ASICs, different edge computing combinations for their particular needs. So if you think about a robotics company that has a physical robot as well as a cloud operation, if you think about autonomous vehicles, if you think about software companies and hardware device companies that may need a custom chip that a current Nvidia GPU is overpowered for, you want to be able to rapidly develop new chips as well as new models.
Right.
And so Architect Labs is offering a way for a lot of these companies to co-design with Architect Labs research team. And they come from Anthropic, Intel, Meta, Tesla, and Apple. And this team has come together to be able to rapidly use AI models to co-design new variations of chips very quickly, in the same way that you might develop a new model.
Why wouldn't they just go to Broadcom?
Broadcom does the back end. This company accomplishes their work on the front end of chip design. And so you have a whole process of front end chip design, then it goes into back end chip design, and then it would go into tape out and fabs from there. So there's a whole process and workflow that takes many years for a novel chip design to become live in public and shipped to customers.
And front end and back end, just walk us through the difference. So what is front end? What does that mean?
Right. So in chip design, you'll go and create novel chip designs. It'll take a fair amount of research, maybe a year, maybe 2 years, in a large company, especially with many different interests. And then they'll go through that design engineering progress, and then run simulations, run data through that. And then it'll go into a back-end engineering process. And in that back-end engineering process, they'll go through a further design work, further engineering testing work, and then they'll come up with a complete chip design, and then take that to, there'll be tape outs with a company like TSMC or Global Foundries. Samsung is a big fab and foundry partner there. Intel is another one. And so there's not many of these companies. And so the backlog there is tremendous. At every juncture that you see here, there is a stacked rank of partners that each of these leading companies will work with and prioritize. And so it's very, very difficult to do anything on the chip level under 3-4 years. And so what this company is doing is very, very focused on that first part, that front end chip design, based on the functional use cases and needs of that particular customer, which have historically been locked out because of cost, talent, and then also the available tools and models. And there's some companies in the space like Synopsys that have been there for a while. But again, the ability to use AI models to arrive at that novel chip design that's suitable for the customer is something that just hasn't been possible today.
Right. You sent me a note earlier this week talking about the difference between high quality tokens and mid quality tokens. What did you mean by that? What's the difference between these two classes of tokens?
Sure. If you look at a reasoning model, large reasoning model today, right? A lot of the Opus models and GPT models that you see out there that people are talking about, the high cost of it, but the high value that you get from using it. A lot of those reasoning tokens are very expensive. There's a huge amount of long context operation that's happening with that. And then there are more instruction and tokens that are used basically for subagents in an agent system to keep the workflow going. And so I think in terms of inference right now, if you look at, there are a lot of inference platforms like FAL, Fireworks, Base 10. What you see is there are a lot of very, very high ROI tokens that differentiate someone's product or agent or robot. And then there are, fine-tuned open source models that provide tokens that are great for other use cases. So in coding agents today, in knowledge work, there's a lot of very expensive token usage happening. When you look at a lot of sort of workflows, the subagents within an agent system and applications, you will see a lot of tokens that are perfectly fine for open source models, right? Getting serverless inference at a much lower rate per millions of tokens than you would from one of these large closed models. And I think that's the argument that you're seeing out there today about model routing. I think over the last month, people have been talking about token costs and token budgets. One of our former portfolio companies, Uber, was notorious for saying,
Yeah, they said we've capped out our budget. We
Yeah.
have no more.
Yeah, and I think so. It's good. I think this concept of token maxing is it's nuanced, right? Using a lot of tokens is a good sign, but are they high quality?
So if I understand you correctly, is what you're saying high quality tokens are the ones that basically they actually get you a better product. Low quality or mid quality tokens, I guess, as you put it, those are the ones that are sort of running in the background. You might not actually need, some of these agents may actually be wasting tokens, and maybe those are lower quality
Yeah.
tokens, and maybe that's what's jumping costs. Is that the way I understand it?
Well, there's many different parameters to how to assess this, but think of it as like high quality inference, right? High value, high cost inference versus lower value, lower cost inference. And it doesn't mean that it's sort of maybe like poor word choice to say low quality or lower quality, but what it is saying there's a different type of model that's useful for a different type of functional use case within an agent workflow, for example. And so reasoning models are quite expensive, as we've seen, right?
That would be a high quality token.
So you wouldn't want to use that for certain types of workloads, certain types of
Right.
jobs. Right? And that's where open source models and most of the high quality open source models, Kimi K 2.6 and 7, have kind of emerged as the most powerful open source model for coding agents. Cursor uses it. Perplexity, which I'm on the board of, also uses that model heavily, as well as Quen. And they're fine-tuning with their own proprietary data. They're creating reinforcement learning loops that help them improve the quality of the outputs of that model. And so that makes a lot more sense than using a closed large language model that's very expensive today from
Right.
Grok or OpenAI.
But in your definition, that would be sort of what you call a mid quality token. A token that is maybe being consumed by not one of the most expensive frontier cutting edge models, but maybe an open source model that does the
Yeah.
job very well. They're getting better,
Yeah.
but that's the mid quality we're talking about.
Well, this inference level, these inference outputs, as they, what we're seeing, historically was they were sort of 6 months behind a lot of these
Yeah.
closed models. And I think some of the recent data from some of our portfolio companies, but also what we're seeing out there from others, is that that gap is actually shortening. It's
Yeah.
closing. And so,
Can I ask the token maxing pivot? The shift in mentality, the realization that we have capped our budgets off at the big tech companies. Um, are you seeing that affect the revenue profile at all of the AI startups that you are working with? Maybe even companies saying, "Well, we thought we could bank on $10 million from, Uber, let's just say, right? And now we're being told they can only spend 4 million, making it up. But is that affecting the revenue profile for these startups?
I think that there's sort of three tiers of where inference is coming from today. Hyperscalers, which are the most expensive inference that you can get today, and really like the hyperscalers, the AWSs, the Azures, the GCPs, they're prioritizing frontier labs, right? The large frontier labs that that are going public soon. And then from there, the neoclouds have essentially been kicked out of any hyperscaler data centers at this point. The neoclouds are now on their own. They're building out their own data centers. They're taking on a lot of capex, and they're trying to convert existing data centers out there. They are specializing, obviously, in AI workloads alone, and so from there, they are prioritizing down into frontier labs as well, just like the hyperscalers and the inference platforms that we're providing to AI startups that you described. Those inference platforms like FAL and Fireworks and Base 10, they are now somewhat on their own too. They're still using some of these neoclouds, but they're getting prioritized over for the large frontier labs. And so what that means is there's a trickle down. There's sort of a pyramid of compute happening on inference. And so as demand increases from a lot of these AI native applications and agent platforms and robotics companies now, they're coming to inference platforms and to neoclouds and hyperscalers and looking for GPU compute. And this shortage is creating not only maximal revenue for a lot of these companies all the way down that pyramid, but it's also creating a shift of where you're getting compute. And so we just announced earlier this week, and I think it was on your show, we led a Series A into HydraHost. HydraHost is an asset light neocloud, which is we did this alongside Nvidia, and the reason why we were so excited about what they're doing is they're taking this long fat tail of data centers out there around the world that are getting. There's new greenfield sites, there's brownfield conversions, there's crypto miners that are getting converted into AI data centers. There's this long fat tail of telcos, REITs, and these existing data center sites. And how do you take them and provide a high SLA service to perform like a neocloud, but for all of these AI native startups that you're mentioning now? And so
the question maybe I'm trying to get at, Steve, is so I hear that from from the infrastructure companies. I was more talking about sort of the application layer companies that these big tech companies are using, let's say for coding or other applications, stuff like that. I mean, I have to imagine that if a big tech company is saying we've already capped out on our budget, that would have implications on the revenue forecast or the revenue potential for any one of these AI application layer companies or maybe even the model companies. Do you not see that to be the case?
no, we're not seeing any sort of negative or dampening effects on revenue. The demand, so there's demand per customer, right? Per end user, whether it's a company or it's a startup.
Right.
Enterprise. And then there's just the expansion, the horizontal number of customers entering the market and saying, we want to use coding agents. We want to empower our knowledge workers with research like Perplexity Computer and APIs from them. Or we want to go into legal and we're a law firm and we want to use Harvey and Lagora, right? And medical use cases and healthcare use cases are exploding right now in terms of consumption. And that's a lot of very complex compute workloads that are coming from new biotech areas as well as synthetic biology. And we haven't even really touched physical AI yet. We've been talking a lot about physical AI for the last year. We're not even in the first inning. We're like in the top of the first inning. When that hits, the sheer number of flops and tokens per watt that are going to be happening on edge as well, but on cloud around the world. Think about the always on 24/7 aspect of what's happening, whether it's in China, Southeast Asia, in the US, Europe. And so even today, where I think our estimates and forecasts are weakest, we have the least confidence on whether or not this is accurate, is going to be in the physical AI sector, because we're not quite sure how quickly that's going to be pervasive. And if that is, the numbers that I gave at the top of this interview about reaching 80 to 100 gigawatts, by 2030 in terms of demand for compute, we may far exceed that based upon the adoption rate of physical AI. And so I think right now we're not seeing any sort of dampening effect on early stage AI native startups, even mid stage, late stage inference platforms. And I will tell you, just looking at Anthropic and OpenAI revenue and some of the NeoCloud revenue, you're seeing just a logarithmic curve that is
Right.
like
Yeah.
across the right. There's no like it's actually quite an interesting time to be an investor because you have to really dig down deep 2-3 layers down because everyone's revenues are growing
Yeah, I
today.
mean, I mean, just like you assessed sort of the quality of token, quality of revenue, quality of earnings is very much something to think about. Steve, I want to thank you for coming on. Congrats on the new fund. Congrats on the investment today. That is Steve Jang, founder and managing partner of Kindred Ventures here on TI TV. That does it for today's show. A quick note, we are off tomorrow, but otherwise we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok, and on LinkedIn. I am already excited for our next show on Monday. Have a great rest of your Thursday. Have a great weekend. Bye-bye for now.